Mark Collinsworth with us once again for another crazy wrap-up of a crazy week on Wall Street. Mark, here we are Friday night. The markets closed today down. The little bit of a rally that started yesterday wasn't sustained, and actually it kind of worked out the way you said it might yesterday when we were talking about this.
Yes, and unfortunately, that's what kind of now concerns me, that it did work out the way that I said it would. What we're actually seeing now is, as I mentioned over the week, with the stock market falling, a lot of your hedge funds are now being hit with margin calls. Those hedge funds are going to the bond market to meet the margin call redemptions because they don't want to sell their stocks to meet them. They want to go to another place where they have profits. Well, so much selling pressure now is hitting the bond market that bonds are actually down. So for this week, I think the stock market's down, I haven't checked the numbers, but I think it's like 12% on the week.
Yeah.
And the bond market's actually down about 10% on the week from all the selling pressure that's come in. If you look at things like the LQD, which is a corporate bond ETF. So where I'm concerned at is what happens next week for hedge funds that specialize just in the bond market. Are they going to get hit with margin calls on bonds, and they'll have to start selling into the bond market? And then at that point, are the guys on the stocks not able to sell bonds? They go back to selling stocks to meet the margin call. Are we going to see a double loop hit next week on stocks from two levels of margin calls coming back into the market directly and indirectly?
If it does play out that way next week, then more really deep water ahead, right?
This is correct. Right now we're at a critical point right now in the stock market and the bond market. The bond market, like I said, has been very, very stressed. I don't know if it can take much more stress. The bond market just was never designed to take this kind of selling pressure, because when you buy a bond, you buy the bond and you hold it to maturity and you collect interest. The bond market was never really designed to take massive amounts of bond selling pressure. And if you're curious, the stock market is a $20 trillion market. The bond market is $100 trillion bond market. You can see the overwhelming odds there.
Yeah, so if that happens, then where do we go from here? It's going to be disastrous. Is that too strong a word?
I don't think it's going to be disastrous, but it's going to be painful. Another thing that a lot of people are also not looking at, for investors that have balanced portfolios of both stocks and bonds, they're kind of sitting back right now thinking, well, the damage is not that bad because my bonds are carrying my stocks like historically they should. But when they start getting their month-end statements here in about another week and a half, and they look at their portfolios and they can't tell the difference between where they lost money between bonds and stocks after this week, how many of them are going to call their advisors and say, get me out no matter what? And is that going to cause even more margin calls both on the bond side and the stock side?
All right, Mark, of course, you're an expert on this, and you know how the market works and how it's not working normally these days. For a retail investor, for a little guy in there with some savings, he wants to retire and all that, how bleak a picture is it for him now?
If you're truly a long-term investor, you really have nothing to worry about. But if you need access to that money in the next 4 or 5 years, you may want to look at actually taking up your cash positions. And I don't mean taking up your cash positions just from selling stocks. You may want to seriously look at what's been happening in the bond market this week. You may also want to seriously consider loosening up on your bond positions as well.
For those who say, I better run to the bank, go to cash, and pull all my cash out. I mean, are we at that point now?
I don't think we're at that point. I mean, there's a lot of people, when they refer back to the bank runs, they always use the 1930s as kind of the bank run scenario.
Right.
A lot of safeguards have been put in place. Money can be moved back and forth between banks much faster than what it used to. We have an electronic system of transfers for transferring cash now between bank accounts, versus in the 1930s, all the transactions were based on physically moving hard cash from point A to point B. So I don't think we're in that situation yet, but if my information from my network of people start to give me signs that the banking system is starting to crack as well, you'll hear it here first, as always.
Yeah. The fear level now, is really accelerating. People wondering what's coming next. There's rumors of martial law coming shortly, total lockdown, this and that. And these rumors are growing along with some of the fear and maybe even outright panic for some people that it's generating. What do you tell them?
Well, there's two interesting points. First one I want to bring up is what's called the Investor Sentiment Survey. It's a survey done amongst retail investors. Looking at those numbers yesterday, you would expect with the market selling off that the average person would be more afraid of the stock market. They're actually have more of a positive view this week than they did last week of the stock market, which, and that is kind of a dangerous realm to be in. But going with your question about, panic with everything going with the coronavirus, I don't think the coronavirus should be that big of an issue. It should be a concern, but not a huge daily worry. But yes, things are not looking good right now for the United States. And this is one of those times where you really want the United States government to really step up and do a whole lot more. And I don't know the reason why they haven't taken that step forward to do more.
Now, also getting back to people with money in the bank in money market accounts and wondering whether it should go to cash or not, whether they should draw it out. Now, you were explaining that there's two types of money market accounts. One is insured FDIC, the other isn't. What would most people have? The little people that have a few bucks in investments.
If you're at an actual bank, like let's say a Wells Fargo, a JP Morgan, odds are your bank account is actually FDIC insured. But if you're at one of these places that maybe like a brokerage firm, and brokerage firms give you the option if you want to do FDIC or the 40 Act money market account.
Yeah.
Unfortunately, when they show you the yields on the two, the yields on the money market 40 Act fund are a little bit higher than the FDIC funds. So a lot of people at brokerage accounts actually tend to pick the higher yielding money market account, and that might not in these situations be the best strategy to go with.
All right, but most people would have a FDIC insured.
A large majority of the people have FDIC insurance.
And if there's any doubt, they should just check with their bank.
Well, if they have an actual bank account, by law, the banks are already FDIC, so there's no worries there. But at your brokerage firm, let's say JP Morgan, Goldman Sachs, call your advisor and ask, is my bank account there or my money market account, is it FDIC insured or is it a 40 Act money market account?
Yeah. So, Mark, wrapping it up now, come Monday, everybody's going to be wondering what the market is going to do then. What do you think it might do?
I believe based on the increase that we've seen here in just the last 24 hours of the coronavirus here in the United States, I think that number will probably get worse over the weekend, and I think you possibly could see more selling pressure come in on Monday morning based just on what happens over the weekend.
And what does that mean for the average investor with some investments in various accounts?
With that, next week could be another painful week for them, both for their stock positions as well as their bond and fixed income positions.
But you're saying what they should be doing or what their broker should be doing for them or the manager should be doing for them, their money manager, is moving stocks around, taking it out of the weak companies, putting it into the stronger, better stocks that always maintain a good edge even in very hard times.
Correct. There's actually certain companies are actually benefiting from the coronavirus right now. So you may want to lean some towards those to try to make money. You may want to do, maybe do a hedge or some kind of short sale to protect yourself on the downside. But I think most importantly right now, if you can't do those strategies or if those strategies are too complicated, raise some cash. The worst case scenario, having a little bit of extra cash in your portfolios during these times at least help you sleep better.
There's a lot of people that have 401ks and they really don't know what's in them, where the investments are, and a lot of them have never contacted the agency that's handling it for them. So if they're wondering now how their 401ks are doing and will be doing in the weeks ahead, what should they do?
I'd be very careful with 401k plans. A large bulk of your 401k plans actually hold just the S&P 500, the index fund. So you actually own the stock market. So when the stock market's down 20 or 30%, that means that index fund is going to be down the exact amount as the stock market. That's why I always tell clients, if you have the ability to go with a money managers, I have a feeling that a lot of these mutual funds that are actively managed, I have a feeling here in the last few weeks, a lot of them have probably been stocking up on a little extra cash themselves, whereas you don't have that luxury in the index funds.
All right, so for the average person who doesn't know where the investments are in his 401k. Should he call the agency that's holding the 401k for him, or what should they do to find out what's going on with their 401k?
Well, a lot of 401k plans actually have internet access where you can log in and actually make changes to your 401k plan. My recommendation there is to pull up the list of holdings. And if you see something that says index in the description, like Vanguard 500 index means you own the S&P 500 index fund, you may want to take a fairly large down cut in that and just let that money go to cash, both for stocks and bonds.
All right. Mark Collinsworth, on a Friday night after another very bad week on Wall Street. Actually, the worst week since what, 2000?
The week Lehman Brothers went bankrupt.
Yeah, yeah. So we're certainly not out of the woods yet. Come Monday, we'll find out how much deeper we're going to be trudging through the woods, and we'll be talking to you then. Thanks, Mark Collinsworth of Vere Global. Thanks once again.
Thank you.